Your life insurance carrier is not looking out for you, and your life insurance agent is not trained to do so, most likely. That is because your policy lapsing or surrendering benefits the company. And they don't talk about life settlements because that is how you benefit. Let's listen to this clip.
Percent of what we see is some UL product that was taken out 10, 20, 30, 40 years ago. The projections ran to a client mid 80s. It was running 8% or more, showing that return. Yet here they are now in their 80s. Cash surrender values have gone way down.
Correct.
Cost of insurance is now going up. So that $1 million policy that they took out for 30 grand that was going to last them their lifetime. Well, they're now living past their lifetime as it was portrayed by the insurance carrier or advisors.
In the podcast, an example is described where someone's parents purchases a VUL, which is a variable universal life policy. These policies correlate with the market. This person asked his parents if he could see the projection of the policy. What they showed him was a projection based on 12% return. The likelihood of this in this day and age is highly unlikely, and so a projection of 3% was requested. 3% is a much more likely outcome of the policy. And of course, everything changed. The policy went from seeming like a good investment to a poor investment. This happens often where projections for the policy are estimated at 8, 11, or 12%. Why? Because they're salespeople, and that kind of projection looks great on paper. However, if performance falls short, that doesn't just affect growth. It can lead to higher premiums for you, lower return on your investment, i.e. lower cash value, and even cost of insurance increases that, of course, they're likely not explaining to you. We are seeing the direct impact of this now because people are living into their 80s and 90s, ages that these policies were not originally projected to last until. Therefore, their policies are lapsing or they had to surrender at zero value without even realizing because no one is reviewing their policies. This is where the life settlement industry comes into play. A life settlement could save the day and still allow you to receive some cash value out of your policy. In fact, it is likely going to be 6 times more than what your life insurance carrier would give you